Welcome back, dear learners. Before the ad break, we're able to post from the Debtors Allowances Journal, from the Debtors Journal to the Debtors Control account. Now we want to see the full Debtors Control account and see how it looks after it is properly completed. But before we do that, let us understand what is this Debtors Control account. It is a summary of all transactions that relate to our debtors, a summary. And this Debtors Control account shows all the amounts that are owed by debtors, as well as the payments that we have received from our debtors. Here is the Debtors Control account. On the debit side, it increases. So you see, I have my plus there. On the credit side, it decreases. There is my minus. Balance brought down 24,200. This is what our debtors owe us at the beginning of the month. With your general debits, these are amounts that we're posting from the general journal. This can include items such as interest that we've charged to our debtors. If our debtors do not pay on time, we charge them interest. That then forms part of your general debits. Remember, this is from your general journal. And here we have 1,460. We also have sales. This is when we've sold goods now to our debtors on credit, remember, from the DJ, and we have 12,800. And if our debtors have overpaid, remember we spoke about the petty cash, PCJ, we are refunding now our debtors. On the credit side, we have our general credits. This involves debtors that can no longer pay their accounts, and we declare them bad debts. So we can have bad debts on our credit side as your general credits here. Remember, it is also from the GJ. One example, as I've said, is your bad debts. So you have your 1,210. Bank and discount allowed, this is when your debtors have paid and you have also allowed them discount. Your debtors allowances, remember, when your debtors are not satisfied with the goods that you have sold to them, they can return them. And we're talking of debtors allowances. To close with your ledger account, you look for the side with the highest amount. In this case, it was the debit side with 38,740. So on both sides, you must have 38,740. Then you get the difference between that and these particular amounts, and you find you have a balance carried down of 31,780. And then eventually, you have a balance brought down, 31,780. When you have now got your balance, you can then post it to the trial balance. When we do the trial balance, it is very important to remember the dead click. And debtors are assets. That means they are going to have a debit balance. Let us then see. Remember that debtors control is an asset. Therefore, it has a debit balance in the trial balance. Let us quickly prepare one and see how to record it. Here is my debtors control. Remember, we've completed it. And the amount that I'm going to post is 31,780. Where do I go? I come to my debit side of the trial balance. And it has to be under my balance sheet accounts section here. Can you see that? I'm going to bring in, I'll say, debtors control 31,780. Once you have done that, that means you have completed your trial balance. You have posted the amount from your debtors control account to the trial balance. Dear learners, it is of great importance that you know how to do the trial balance. We'll now move on to internal controls. Very important to know that our debtors are assets, and every business has to look after its assets. And most importantly, our debtors. So there has to be measures in place that we protect our debtors, as well as encouraging them to pay their accounts early. And here are some of the examples on the measures that a business can take to encourage the debtors to pay. Firstly, we will say A business has to screen the debtors before selling the goods on credit. To screen simply means our debtors must bring proof that they can pay. They have to provide us with documents that can say that they qualify to become debtors. Do they qualify for us to give them goods on credit? That is screening. That means some will not qualify to become debtors, and then some will become debtors. If we do not screen, we end up with people who are not able to pay back the money, and yet we are selling goods to them. That is not good for any business. So a business, number one, needs to screen its debtors, and then we need to send reminders. And these reminders need to be regular reminders. It can be monthly reminders. And the kind of reminders that we can send them are SMSs, which we can send via the phone, or we can send statements. In these days, we can email the statements, or we can even send them by post. That is very important for a business, to constantly remind debtors of how much they are owing. And we can charge interest to our debtors on overdue accounts. The moment an account is taking longer to settle, we can charge interest. That will encourage now our debtors to pay the account much quicker so that they cannot be charged interest. One other area that we can look into to encourage debtors is to give discounts for early payments. So we say to our debtors, if you pay within this particular period, we will give you discount. That will encourage them then to try and settle their account in the shorter period, so then they can get the benefit of getting the discount. Thank you so much, dear learners, for joining me in today's class. It's been a great pleasure having you in my class, and I hope to see you again soon. It is goodbye and take care.